Morgan Stanley Private Wealth Management sees opportunities, even some of the priciest market groups. Kathleen Entwistle is Managing Director, Private Wealth Advisor at the firm. Kathy, great to have you with us.
Great to be here. Thank you.
So your client base, high net worth individuals, they still like the AI trade. How are they feeling at this point? I mean, we're talking on a day where Micron is up 20% and is a $1 trillion company.
Yeah, I mean, the market has been on a tear for sure. And certainly anyone that's been participating in the market is very happy at this moment. The question is whether you can continue to find opportunities or not. And we do think there are opportunities there. You just have to be mindful and just a little bit careful about where you're going. Also, if we do have any kind of a larger pullback, it would be a great opportunity to jump in.
Okay, so where are the opportunities? Let's say outside of the tech trade, a client says, we want to diversify. We don't want to be all in on chips and, you know, Meta and all that.
We're putting clients in real assets right now. So we're also looking at energy, infrastructure, things like that, the digital space. So I do think that that's an area that we can look at. We're actually looking to pull back a little bit on the duration of bonds, also because of some of the recent occurrences in the interest rate market. And basically, we would just stick with U.S., emerging markets, and also start dipping toes into the small cap arena.
The energy trade's actually hanging in there. We mentioned earlier SLBs at levels we saw 3 years ago, so they're trading well. How important, in your opinion, is the underlying commodity, or have people realized that these energy stocks actually can go higher regardless?
I think it's really important. With a market where we have the equities up as high as they are, you do want to find those opportunities. And energy is going to hold up even in inflationary environments. And I think because of what we're seeing in the inflation space, and also some of the signals we're getting out of like the Fed futures and so forth on rates not being cut, but potentially being, jacked up a rate or so, it's time to consider adding some serious commodities and real assets into the portfolio. A sleeve of it.
So thanks for being here, first of all. So when you talk about real assets, is that real estate? Is it art? Is it things outside of the market? What are you referring to?
Well, when we think about real assets, we're thinking about some of the things inside the market, certainly outside the market as well. But we like hedge funds. We like, gold and silver and things like that. We like energy and different areas that will respond well in the kind of market that we're in.
Kathy, in terms of asset allocation, have you changed at all in terms of, I hear you talking a little bit about fixed income and some of the dynamics, even private credit, which, if it was 6 months ago, it seemed like it was part of an eye of the storm. Anything changed in terms of how you're viewing asset allocation? Yeah,
when I look at asset allocation, I'm looking at the big picture and driving down. So the allocation piece isn't changing too much in terms of equity allocation, fixed income, and alts. But what I would say is, we are bringing more of the evergreen alternatives into clients' portfolios as a diversifier and a non-correlated asset, which I think makes sense in a market where we're up so high. We want to find other areas that have opportunities.
Is there an example of one of those that's tradable? In other words, are these some of the ETFs like the JP Morgan? Well, it's Morgan Stanley, so you got the Morgan Stanley ones, of course.
Well, for example, I would say you were talking about the credit. There's also private equity. There's infrastructure. There's a lot of infrastructure out there that you can buy in an evergreen structure, which is considered an alternative investment the way it's put together and created. So we like all of that. And in the back in the day, infrastructure was tunnels and bridges and roads, and today it's communication towers and digital and things like that. So we definitely think that with all of the data centers and all of the building that's going on and the lack of energy to fuel all of this, there's going to be a scarcity, and we want to invest in the scarcity before it becomes too expensive.